Good afternoon. We'd like to welcome you to the Gabelli Funds live webcast series. Today, Dan Miller, portfolio manager of the Gabelli Pet Parents Fund, is excited to be speaking on the booming global pet economy and why your clients can relate. I'd like to now turn the call over to Dan.
Thanks, Chris, and good afternoon. Thanks for joining us for this discussion on the global pet economy and why your clients might be interested in our latest fund launch. You can follow along, by the way, on the slides if you're using the Zoom webcast. So this is me. I'm Dan Miller, and I'm managing the Gabelli Pet Parents Fund. I've been with Gabelli for about 17 years, and I've been managing portfolios since 2012. But importantly, I'm a true believer in the profound impact that companion pets can have on human lives. In part because of this powerful and emotional connection that many of us share with our pets, it has been shown that the top three areas of interest when financial advisors speak with their clients are grandchildren, giving to charity, and companion pets. We launched this fund as an open-end portfolio on April 1st of this year. And as it starts to gain traction and shelf space, we are excited to share with you and keep you updated on some of these very interesting and supporting dynamics. There are about 85 million households in the US with at least one companion pet. This compares to just 42 million households that have a human child under 25 years of age. Changing demographics are playing a larger role as millennials delay starting their own families, live at home longer, and adapt to the influences of social media. In fact, 38% of all millennials have a dog, while 35% have cats. Baby boomers are also driving an increase in pet adoption. 31% of all boomers have a companion dog, while 32% have cats. In the US, the companion pet economy is a $75 billion industry and has an expected compound growth rate of 5 to 8% through 2023. Globally, the pet economy is estimated to be about $150 billion and should be north of $200 billion by 2025. In light of some recent commentary about the potential for a recession, both in the US and abroad, I think it's interesting to note that during the 2008-2009 downturn, spending on pets in the US actually increased. Americans spent about $565 annually on their pets compared to the prior 10-year average of just $507, which we think reflects a shift away from more expensive vacations and spending to more quality time at home with your pets. Several trends are driving the increase in the size of the pet market, and we'll highlight three of them now. The first is humanization, meaning how we treat our pets as members of the family. They sleep in our beds, we buy them birthday and holiday gifts, we feed them human diets. As you can see here, $700 million spent annually on Valentine's Day presents for our pets. Innovation, including new methods for treating and preventing afflictions, providing easier and more cost-effective care. And compliance, leveraging technology to improve our pets' lives as never before. And we're in the very early stages. In fact, lifetime spending on the average companion dog today is right about $3,500, which is only 20% of the roughly $17,000 that the industry says we should be spending in order to maximize our dogs' most healthy and long lives. Spending on pet food, oops, slides froze. There you go. Spending on pet food is approximately $30 billion in the US, with 65% opting for premium ingredients, including food that contains omega-3s, vitamins, could be all natural, grass-fed proteins. E-commerce platforms like Chewy and Amazon have also made it easier to adopt innovative products and services. And pet treat functionality has grown, things like treats that have dental care embedded in them. Veterinary and diagnostic care is about $17 billion of spending now and should grow between 7 to 9% the next several years, driven by the simple fact that only about 80% of dogs and half of cats receive care at least once a year. Most of the industry is made up of annual exams, diagnostics, surgeries, vaccinations. A majority of pet parents, say that they would be buying more pet medications if prices were more competitive. Pet therapeutics and vaccines are roughly $12 billion of annual spending. It's likely that your clients' pets have common pet conditions such as disease of the kidney and osteoarthritis. These should be treated with therapeutics or possibly even prevented with vaccines. Companies like Zoetis, which I'll talk about more in a minute, and Kindred Biosciences, which is the largest holding today in our portfolio, have developed treatments that cost 100 times less than humans to develop. As a result of all of those attractive demographics and fundamentals, corporate deal activity remains robust and active, with trading multiples of about 3.9 times sales and just over 18 times EBITDA. As you can see, there have been several dozen M&A or deals in the last couple of years alone, and we think that will continue. So in order to capitalize on all that, we started this mutual fund, Gabelli Pet Parents. The symbol is PETZX. We are invested in about 30 companies on a global basis, all market caps. We have a long-only, long-term bias towards investing in companies that we think are attractively valued. We have liquidity on a daily basis and a very attractive expense ratio of just 90 basis points. Before we take Q&A, let me talk briefly about two of our larger holdings. I mentioned before briefly a company called Zoetis, which is a 60 billion market cap or so, and the world's largest pure play animal health business. They develop medicines, vaccines, diagnostic products, genetic tests, and other bio devices. 2019 revenue should approach about 6.2 billion, up from 5.5 or so in 2018. Zoetis has been a really successful integrator of acquisitions. They've done several dozen. They are focused on margin improvement, and they also will have several new launches in 2020 and 21, which should support growth well above kind of the norm for the industry. Second company I'd mention, which I think is really compelling here, is PetIQ. It's a small cap, just under $1 billion in market value. They manufacture and distribute vet grade and over-the-counter pet medications and supplies, wellness products, and through a recent acquisition of a company called VIP Pet Care, offer about 3,400 clinics near 90% of the U.S. population, both mobile and in-store through partnerships with retailers like Walmart and other. So maybe I can just quickly summarize by saying that we clearly believe that the companion pet market is an attractive and long-term area for investment dollars, but we also think this is a unique and compelling idea that you may want to share with your clients who can appreciate and relate to the growing population of companion pets. So with that, I'll say thank you for your interest, and I welcome your questions.
As we wait for questions, we have a few that came in offline. The first one is, what makes you a little bit different than the pet ETF that's out in the space right now?
Well, it's much different in that we're actively managed versus a passive ETF strategy that kind of mimics the FactSet Pet Index, whatever that means, which is really tied to revenues and is mostly market cap weighted. You know, we're a global portfolio. I spent a couple of days this summer overseas visiting with the management teams of some of the non-US pet related companies, and it really gives us an advantage. I sat down for almost 2 hours with the CEO of a company called Pets at Home, 3 hours outside of London. And it really gives you an ability to, I think, generate incremental returns. We bought a lot of that stock after my meeting, and the shares are up probably 25% since that point in time. So the fact that, you know, we do fundamental analysis and research, and we'll do calls like these, and we'll be available to speak with you and your clients about what we're doing, I think is probably the biggest point of difference.
Does further industry consolidation make investing within the pet space more difficult?
Well, the universe of public companies has certainly become smaller in the last couple of years. Even since we launched this fund, we were really the beneficiary of two deals. The most recent was a company called Aratana, which was acquired by Elanco Health. Elanco also just did another major deal this week where they're going to be buying Bayer's animal health business, which we think is interesting. So yes, the answer is it does become limited, but I'd also note that we don't just own pure play animal health companies like Zoetis and PetIQ. We also, in the recent downturn, bought some shares of Amazon, and we bought some CVS Group because, as you're clearly aware, those two are some of the biggest retailers of pet products out there. So we try to, think about the universe of pet-related things as big as we can. I see a question also came in that says, would it be possible to get a copy of your slide deck? And I would absolutely be happy to share it with you. If you can get us your email, or maybe someone on our team knows your email. We are making a great effort to be transparent with the portfolio. We also want to help you bring in business from your clients and have this PowerPoint. We have a more in-depth slide deck. We have an interview that we did with a recent trade publication. We have fact sheets, and we're happy to send you soft and hard copies so that you can better market this idea.
Yeah, just another question here. Do you expect any other pharmaceutical companies to divest their pet businesses as they're profitable, or do you expect them to retain them?
Well, there aren't that many more large chunks of animal health business out there, but yeah, I think you've seen tremendous consolidation, and given the growth in the animal, and especially the companion animal versus livestock, of course, market, you'll see both pharma, healthcare broadly speaking, and even consumer firms continue to invest in this area, and they'll do that organically and inorganically.
And then just one other question. Is there any read-through as to any additional companies looking to come public, or any other type of financial engineering you're taking a look at?
Nothing that I'm aware of on the horizon. We just had Chewy come public. It's been private equity owned for several years, and they're one of the faster growing online e-commerce platforms. But as far as I'm aware, I don't expect any IPOs in the near future.
Great. Well, thank you, Dan. We appreciate you taking the time, and we'd like to thank everyone for joining the webcast today. If you have any...
Investors should carefully consider the investment objectives, risks, charges, and expenses of the fund before investing. The prospectus, which contains more complete information about this and other matters, should be read carefully before investing. To obtain a prospectus, please call 800-GABELLI or visit www.gabelli.com.